It really wasn't that long ago that Sri Lanka was all over the news for all the wrong reasons. We're talking economic collapse, debt defaults, you name it. But today, well, the story couldn't be more different. It's an incredible turnaround, and we're about to dive deep into how it happened, and maybe more importantly, what the brand new investment landscape really looks like now.
I mean, just look at this journey. Back in 2022, the economy cratered, shrinking by over 7%. It was a staggering crisis. Then came the tough medicine, an IMF program and a series of really painful but necessary reforms. And the result? Well, the economy is roaring back with a projected GDP growth of over 5% in 2024, and they've wrestled inflation down to below 5%. This hard-won stability is the real deal. It's even led to an improved sovereign credit rating. This is the bedrock for everything that comes next. So, with stability back on the table, what does that actually mean for the market? It means you can take that old playbook and, well, toss it out the window. The rules of the game have totally changed. During that initial bounce back, it was one of those a rising tide lifts all boats situations. You could pretty much buy anything and watch it go up. That phase, it's officially over. The easy money has already been made.
The new name of the game, the word you're going to hear everywhere, is selectivity. It's about moving past that broad market cheer and getting, surgical. It means you have to do your homework, dig into the fundamentals, and find those solid companies with real earnings, fair valuations, and the kind of resilience that lets them thrive in this new, more mature recovery.
And this right here shows you exactly why this matters so much. The overall market is trading at a PE ratio of about 10.4x. But look closer. Hidden inside that average are sectors like industrials, which are forecast to grow their earnings by an incredible 48% every single year for the next 5 years. That massive gap is exactly the kind of opportunity that selective investors are hunting for.
All right, so let's go hunting. Where are these hidden gems hiding? We're going to look at some specific sectors that seem poised to really break out. First up, construction. We are seeing a full-blown infrastructure super cycle get underway. The government is pouring money into rebuilding the country, with a massive 342 billion rupees set aside just for road development in 2026. That kind of spending creates a powerful tailwind for the entire construction and building materials sector. Let's look at a perfect example, Royal Ceramics, or RCL. They're a major player in building materials. It's trading at a PE ratio of just over 9, while one of its peers is up at 23. And look at that price to net asset value ratio. It's trading right at its book value, basically what the company's assets are worth. This looks like a classic case of the market maybe overlooking some serious potential.
But the story isn't just about rebuilding at home. There's a whole new class of Sri Lankan manufacturers that are looking outward and absolutely crushing it on the global stage. Okay, get ready for this number. Take Sierra Cables. In just the first half of the fiscal year, their net profit jumped by 130%. That's not just growth, that is explosive. So what in the world is driving this? Well, the CEO's own words tell the story. The company completely shifted its strategy to become an export powerhouse. They're not just selling cables, they're supplying high-value, certified products to demanding markets like the US. This focus on global quality is unlocking a whole new level of opportunity. Okay, so we've seen deep value in construction and meteoric growth in manufacturing. But what if you're an investor who, likes to sleep well at night? Well, there are some really interesting opportunities there too, across a few other key sectors.
Yeah, there are a couple more paths to check out. First, there's some deep value hiding in the financial sector. The big private banks are going through what's being called an asset quality pivot. Basically, borrowers are healthier, and that's led to combined earnings growth of over 50% for some of them. Then you've got your defensive growth plays, companies like Sunshine Holdings, which are in stable sectors like healthcare and consumer goods. And this search for value also leads us to renewable energy, where players like Windforce and Vallibel Power are offering a really compelling mix of growth and high dividend yields. Now, no recovery is ever a straight line up. So to get the complete picture, we have to be honest and talk about the challenges and some of the newer opportunities that are still on the horizon.
Right, it's super important to keep an eye on the potential headwinds. Things like climate events can shock the agricultural supply. There's always the risk of delays in reforms, the government's debt burden is still heavy, and of course, global uncertainty is always a factor.
But balancing those risks are some new structural strengths. We're seeing proactive regulation protecting the market, and we're at the very beginning of an IPO resurgence. They're calling it the Great Unlocking, which is turning years of private effort into tradable public companies. And you can really feel the ambition to overcome these challenges. This quote, it just perfectly captures that powerful nationwide drive to make this recovery stick, to make it permanent, and to finally break the cycle of crises for good. And that right there leaves us with the ultimate question. The foundation of stability, it has been painstakingly laid. The really hard part is done. But now comes the next part, which might be even harder, building on that foundation. Can the nation's leaders and its most innovative companies take this newfound stability and turn it into lasting, inclusive growth for everybody? That is the billion-dollar question for Sri Lanka's future.